Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an introduction to Aftermath Silver, traded on the TSXV under the ticker AAG and on the OTCQB under the ticker AAGFF. And we're joined today with the founder and executive chairman of Aftermath Silver, Michael Williams. And Michael, it's great to get you on the show to introduce Aftermath Silver. We've been talking about this company for over a year. Nice to finally get you on
I
the
know.
show to do a deep dive. And I guess let's just kick it off with how things came together. You got a couple projects here, a silver project in Chile, but the flagship project, the Berenguela Project, is in Peru, and it's really polymetallic. It's a silver, manganese, copper, a little bit of zinc, but mostly focused on the silver and manganese. How did this project come into the stable? What did you see? What did the team see to bring it in the first place? And just give us a nice snapshot of how this company was launched and how these projects came into the fold.
Great. Well, thanks for having me on, Chad. I know you've been at me for a little bit to come on. My idea was to build a pure silver company. I saw a void in that space. There's lots of gold companies, but there are, in the scheme of things, I think very few good silver companies. Silver's a hard metal to make economic and to build a mine around. And our original idea was to focus on open pit opportunities, lower operating costs, hopefully lower capex. So that was the goal. So we originally picked up a project called Challacollo in northern Chile from Mandalay. We paid $10 million for it. They put 33 million into property payments and money in the ground. So, we thought that was a good opportunity. And from there, we levered into what's now become our flagship, Berenguela in Peru. So we'd identified an opportunity with that Silver Standard had, which is now called SSR, and they've since merged with a Turkish firm. But the idea was that they were going to get out of Peru, and this was going to be put on the market, and we were able to put a bid in on it. And we were aggressive at the time. It was 15 million US, of which I think have 6 million US in payments left over 24 months. So we're almost through that. But it was a great opportunity because it's a large silver resource, and it also had some copper with it. But what we didn't realize at the time was the significance of the manganese component. You mentioned it was polymetallic. So it's silver, copper, and manganese. And interestingly enough, the silver on its own would make for a great silver company based on the amount of ounces we have. And then on top of that, you add the copper in, and you bring in the manganese. Now, the downside to the polymetallic deposits is metallurgy. And I think, if I talk to the guys at SSR, they also weren't prepared to put in the manpower it would take to figure out the met work. And we've since put out several news releases on metallurgy, and they've come back exceedingly positive. But what's also happened, and I think this is key, the manganese has come into vogue in the electrical vehicle industry as part of the batteries. It's used in EV batteries. So it's largely replacing some of the cobalt. It's cheaper than cobalt. It's mined in countries that are more friendly, say, than the Congo, which has a lot of cobalt. So it's a metal that everyone now, it's a critical metal, and people are looking for good manganese deposits. Lots of manganese in the world. Historically, when we heard manganese, it's largely used in the steel industry, but in order to use it in the electrical vehicle batteries, it has to come from an oxide or a carbonate deposit, and ours is an oxide deposit. So it fits that parameter. The other thing that's critical with manganese to be an electrical vehicle battery, it has to be 99.8% pure. Now, our initial testing, and we put news releases out to this effect, we're showing 99.9%. So it's there as far as the purity level goes. What we need to do now, though, is scale it up, and we'll do that through a PEA, which is out next year, probably in about, I'd say, 6 to 8 months. And then through a pre-feasibility study, which will begin the following year. And at that point, at the pre-feasibility level, we'll have done a bulk sample and we'll have a pilot plant. I can then put specifications onto the product. And then, we'd hope to see some interest from, battery manufacturers, car manufacturers, as long as the specifications hold up, which we believe they will. But we need to scale it up, which we're currently doing now. And at the same time, we still have a significant silver and copper deposit.
Well, let's dig into some of the different components here. We'll get to the metallurgy a little deeper in a minute, but let's dig into the deposit itself first. At Berenguela, you mentioned you have a significant silver component. When we just sat down at a conference in Fort Lauderdale just a couple weeks back, I did not realize how much contained silver is in this project. I've got your resource pulled up here on the slide deck. You've got 140 million ounces of silver. I mean, just that alone, Michael, puts it in a classification of, one of the top undeveloped silver deposits on the planet. A lot of companies have been working for a decade to get to 40, 50, 60 million ounces contained. And a lot of people report silver equivalent ounces. So let's talk about the silver contained and then also break it down for us. How much copper, how much manganese? Just give us a sense of the resource itself.
Sure. So this is contained. So we built a pit shell and this would be in it. So in measured and indicated, it's 101 million ounces. And then in inferred, there's a further, close to 40 million, 38.8. But we're currently drilling. So the idea is to bring some of the inferred into the measured and indicated category. So yeah, it's a big silver resource. And then we have close to, I think it's 900 million pounds of copper and 3 million tons of manganese metal. So it is a big ore body from a contained metal point of view. And once we put out the PEA, we'll update. Actually, we might update the resource in Q1 because we are currently drilling. And I think we'll have to wait for the assays. But assuming that they're good, we can move some of the inferred into measured and indicated, which is what we want for the PEA.
Well, and let's talk about the drilling a little bit. There's 386 drill holes that have been pierced into this deposit over the time. Some of that was historical work done by other operators. Some of that's been done by Aftermath Silver. Talk to us about the drill work that's done, but also what kind of drilling's underway? How many meters? What is the plan on this year's exploration program?
Well, we're currently drilling right now. So historically, as you said, there's 380 drill holes, 386 to be exact. But we'd put in about 65 of those, and our holes were all diamond drilling. So we had this huge resource base to begin with, and it made it a lot easier. The key thing with this deposit, or one of them, comes right to surface. So, you're looking at an anticipated strip ratio, being that it's on surface, should be very, very positive, and that'll come out in the PEA. But it looks stellar. So not only do you have a lot of silver, manganese, and copper, it's right at surface, so it's very amenable, we think, to open pit mining, which was the original goal.
Yeah, a lot of positives here in that it's close to surface, low strip ratio. You've got battery metals in there. You've got precious metals in there. Let's talk a little bit about the metallurgy then. And then are you going to produce different concentrates? What metal reports to what concentrate? Give us a sense of some of the metallurgical work that's underway and that you've done in the past.
Certainly. Well, 10 years ago, and this deposit's been known for a long time. It was mined 100 years ago for the silver at surface. These guys historically took out up to 1,000 grams at surface. And the problem was for everyone else was the manganese mixing with the silver. And it was hard metallurgically through traditional methods to get your recoveries of the silver and copper, I'm assuming, to a point where you can make an economic ore body. What's happened is largely two things. One, I've already spoken about. The demand now for this type of manganese oxide that can be used in electrical vehicle batteries has certainly gone through the roof. But the process to remove it has changed as well. Historically, you would have used mechanical methodology. We're going to use hydromet, which is the key is this deposit is acid soluble. So we use sulfuric acid. We then produce silver dore through a process called Merrill-Crowe. The remaining fluids, pregnant solution, we then electrowin it and produce copper cathode. That's what we're thinking right now. Then we take out the impurities and the zinc and we crystallize it to make manganese sulfate. Now that's the product that eventually goes into the batteries. So the challenge is this is at 4,200 meters, which is high. It's not high for mining. There's lots of mines at that altitude or higher, but the process doesn't optimize because I can't get the temperature of the fluids to boil. The boiling point is 87 degrees. To maximize your recoveries and such, it needs to be 94 degrees. So what we're going to do, and it solves another problem. This is in the basin of Lake Titicaca. So we've got a river running through the project. It would eventually drain into that lake, and that's the most famous lake in South America. And I think this is going to be a big project. It'll be a target of environmentalists if they think our tailings facility, that they always use it as a weapon. They'll say, well, if your tailings, anything ever happened, it'll end up in this drainage, end up in the lake. And I get it. But, that's, it's a legitimate concern. We would over-engineer it. But if people locally think that's a possibility, it'll make it tougher to permit. So one of the other things we've got going for us, we're only 6 kilometers, what's that, 3.5 miles, 4 miles from a rail line that's under capacity. What we would do is we'd coarse crush on site, maybe use ore sorting. We're looking at that right now, and then put that product on the rail. And then you would process lower down and to produce the solutions that eventually become the products. So we would bring a spur. We have to bring the acid up anyway. So we'll take the mineralization through rail, and then we'll process it at lower elevation. So it's an elegant solution to a complex problem. But because we're close to infrastructure, it'll work very well, in my opinion.
Yeah, I think that's another good point, that you're so close to road and rail. And then, like you say, you put it on the rail, ship it down there, and process it using that hydromet at a lower elevation where you can get the boiling point where you need it. So it solves the environmental issue, and it also points to the infrastructure advantage you have. I guess the other thing that people will be wondering, Michael, is who is the team behind Aftermath Silver? Is this your first rodeo? Do you guys know what you're doing? So maybe speak to the bench strength of your team, because it is impressive.
No, fair enough. Our team, it's well known in the industry. I'm close to 30 years. I've sold companies. One of our directors, David Terry, was part of the Great Bear team. He was an independent director. That was a $2 billion takeout. The CEO, Ralph Rushton, has 15 years experience with Anglo American, and I think another 15 years in the junior mining industry. Very, very competent person and very good at what he does. I'll tell you this, Shad, what do you think? There's 2,000 companies like ours out there, junior companies, and there's probably 300, maybe 200 to 300 with really good projects that, your listeners should look at. There's not 250 or 300 good CEOs. So we're very fortunate to have Ralph. And Ralph brought in a gentleman by the name of Michael Parker. Michael Parker was First Quantum's country manager in Peru. Like Ralph, a geologist, a very competent individual. He's running the program, and he's done a great job. I can't give him enough credit. He's put a team together, mainly made up of Peruvian people. Michael has a Peruvian passport and is used to living and working in Peru. And he brought in a fellow named Victor Grande. So one of our key people, though, in this day and age is your community relations and your vice president of sustainability. That is almost as important role as the CEO and chairman, because they deal with the local people. And if you do not have the local people supporting your projects, it's very difficult to get projects like this permitted. Now, Victor is a former World Bank development officer. He also speaks the local language, and he's indigenous Peruvian. So he's put a team together to handle the community relations for us, and it's made things so much easier and smoother. We haven't, knock on wood, had any real issues with the local community, and we've delivered on what we said we were going to do. Now, we have 19 surface agreements with individual owners, which is the preferred methodology because we don't have to deal with 4 or 5 thousand people in the community. And, I expect over the next 24 months, we're going to enter into long-term leases with those individuals. So, Victor is key, Michael, Ralph, and then our independents, as I mentioned before, David Terry and Keenan Hohoyle, who's a lawyer currently working for Rio and previous had worked for Pan American Silver and is former general counsel for BHP Billiton. So, I'll put our team up against anyone. They're and the proof is in the pudding. In the last 24 months, I think we're up 300% on our share price. So things are working out.
Yeah, Michael, it's been a nice performance in the Aftermath Silver stock over just the last years, and you have some nice strategic shareholders in there. You mentioned Mandalay. Part of that is the option agreement, bringing that into the fold, but also Eric Sprott in there at 14.4%. Walk us through the share structure and then what's the financial health of the company?
Well, right now we have 10 million in our treasury. Eric Sprott is our largest shareholder, and he is putting another 10 million in. I need shareholder approval at the end of November for that, which we should have. So, Eric will own, assuming we get that shareholder support, 25% of the company. Now, the interesting thing with Eric is, as you well know, he's historically follows precious metal. So Eric, after the Beaver Creek conference in September, phoned us up and asked, after seeing our presentation that the CEO Ralph Rushton gave, asked to put in another 5 million to go to 19.9. 2 months later, he phoned up again and asked if he could go over 19.9 because he liked the manganese. He looked into it, and as much as he likes silver, he realized that we're uniquely positioned because of our manganese. So Eric has decided to go to 25% pending shareholder approval. But I think it's a good vote of confidence that we're on the right track, that Eric is sort of likes us because of silver, but now likes us because of the manganese. So it sent a message to the market as well, a positive one.
Yeah, absolutely. And everybody knows Eric is a silver bug, but I think he
Hmm.
can see the writing on the wall with manganese as a battery metal. And I guess to that point, you also have a unique situation in that you have such a large manganese component that when you produce the silver, I guess it's kind of a backhanded compliment that if you produce too much, you can flood the market with manganese. So speak to the balance of how you'd produce the silver and the manganese in concert.
Well, that's what we're looking at now, and that'll all be addressed in the PEA. But it's not as simple as, you produce as much silver as you can. I always think, if you're a standalone silver operation, to be considered a real silver company, you'd like to be around 6 million ounces of annual production. With the copper and with the manganese, we have to balance that somewhat. I would think if we produced that much silver annually, it would impact the manganese. So we've got to be careful, and that's what the engineers are looking at right now. How much silver we produce annually, how much copper, then how much manganese. But I think the bottom line is what you'll have to look at is what's the internal rate of return going to be, and then what is the net present value. And with those three metals, with the current pricing, we've got our fingers crossed when the PEA comes out. We're looking forward to it.
And just while we're on the topic of the metals again, as we keep looping back to, there's multiple value drivers here. How important is copper in this? We've talked a lot about the silver. We've talked a lot about the manganese. How important of a co-credit is the copper?
Copper is significant. Without putting out the PEA, it's hard to talk to the economics. But I'd like to think even if we just had copper, you might, you would keep working because it's an interesting project just on the copper alone. But we're what is it, 900 million pounds of copper. That's not insignificant. And yeah, The copper is going to definitely impact the economics of this project in a positive way. What you look to do is maybe the copper and silver pay for the manganese, or the manganese pays for the copper and silver. So I think it's going to come out, I'm optimistic that we'll be able to put those numbers out and the market will react.
Yeah, Michael, any way you slice it, it sounds like an energy metal story because silver being used in solar panels, copper for energy transmission, manganese for batteries. I mean, a lot of pluses here on the energy metal side, whichever way it floats, whether the copper and the silver support the manganese or whether the manganese supports the copper and
Exactly.
silver. An interesting project, very unique, I would say, in the marketplace, and taps into the interest that investors have in CRD deposits. So let's, I guess, wrap up with key catalyst on the horizon. You got a lot of drilling you're doing right now, but walk us through any other news that you're doing on the metallurgical side, and as you build towards the resource and the PEA, what else do you want investors focused on, Michael?
Well, I think look in about another 30 to 45 days for our drill results. I think they're going to be critical. We are drilling, we're bringing some inferred into measured and indicated, but we're also on our eastern flank. We had a hole. I'm going to go off rope memory. It was over 100 meters, I think 1.17% copper. We're following up on that to see if there is a significant copper component to the east. Now, the other thing to look for in this deposit, as you mentioned, it's carbonate replacement deposit. So there is a source of the fluids that form that deposit. Maybe it's out to the east, like a porphyry, or maybe there is a skarn mineralization. To the west, we've got on surface 2 kilometers of, in some cases 2% copper, but it's close to a magnetite mine that's not on our property. But what it signifies, it's a different style of mineralization, and there's a chargeability anomaly sitting below that. That will get drilled once we get the permits to drill that area, probably in about 6 months. Those are if we hit on that, it goes from an excellent deposit to maybe, if it's close to surface or reasonable, maybe you have a world-class ore body. So our shareholders have upside from drilling. They have upside on us continuing to demonstrate through our metallurgical work that we've got a manganese product that can be used in batteries. So we can maintain the 99.8% as we scale up the project. And then you've got the PEA coming out, let's call it 6 to 8 months, followed by a PFS, pre-feasibility study. So there should be a significant news flow coming.
Well, and just one more thing that we'll layer on before we wrap up, Michael, is you have another project in Chile that's a silver gold project. I will let you pronounce it, but it's got a lot of silver in the ground too. So just for an optionality factor as another kicker, if we keep seeing silver prices climb higher into the mid 30s, just talk about the optionality of the silver in Chile.
Well, we're contemplating drilling that right now. We were holding off because the market's been focusing on Berenguela, but my opinion is we've got the makings of a really good silver market, and to take advantage of it, we want to hopefully expand that project to the point where it could be a standalone, and we will probably be looking at doing that next year. But that's also open pittable. I would think the strip ratio on that would be a little bit higher than Berenguela, but still a decent project in and of its own right. And, we'll look at some options down the road as far as that project goes, but we definitely want to do some more work on it.
Yeah, so just more precious metals in the mix, as a secondary project, just for a little more optionality, but lots of catalysts on the horizon just at Berenguela. So we'll keep our eyes peeled for some of those drill results and some of the metallurgical results as they come back in. Michael, it was great having you on the show to unpack and introduce Aftermath Silver. And if people listening in want to follow along with the news flow, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section, so you too can follow along as more news hits the markets. And Michael, as always, looking forward to our next conversation.
Absolutely. I'd be remiss if I wasn't on sooner.